You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. The Option Block is brought to you by TradeStation. TradeStation has been giving options traders an edge for over 20 years. Their suite of simple yet powerful analysis tools and lightning-fast order execution can be accessed as an app on your phone, web browser, or computer. Education is in TradeStation's DNA, offering help for traders of all levels. And now, TradeStation is commission-free for equities and options trades. For more information, visit tradestation.com/optionsinsider. And now, get ready to hit the Option Block.
All right, everybody. That rockin' tune can mean one of two things. It's either Monday at noon Central, 1 p.m. Eastern, or it's Thursday, noon Central, 1 p.m. Eastern. This time it's the former. It's Monday. Time to kick off the week with the Option Block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the aforementioned network. Glad you guys are enjoying. Guys and gals and everyone in between are out there enjoying the legion of content that is hitting the network for you guys these days. A lot more in store for you this week, so stay tuned. We'll be back, of course, later today for crypto. If you're listening live, of course, you'll get some fun stuff broadcast there in between and a whole bunch of other stuff scheduled throughout the week. Return of our old buddy, Mr. Schlesinger. That should be fun later this week from Volview's infamy, as well as other things, and a lot of other fun stuff in store. So make sure, if you haven't done so already, you subscribe to the full network. Most of you already have. And you can get the full kit and caboodle at your leisure, however you like to enjoy it. Make sure to keep those questions and comments coming. And if you like what you hear, a review or two wouldn't hurt. Keeps the new folks flowing in and discovering the network nigh 13-odd years later here. All right, and joining me on the old program today. First, let's go out to the town that flooded America, a.k.a. Riverside, where we are joined once again by the greasiest of meatballs, maybe now the soggiest, we shall see, of meatballs, Mr. Mark Sebastian from OptionPit.com, by way of Carmen Lion Capital. Mr. Meatball, welcome back to the program. Glad to see you survived the rather epic flooding we've had around Chicago of late.
Yeah, I mean, just an amazing amount of rain. The Des Plaines River over by some of my some people I know, it looks like it's going to, threaten that 100-year flood line, which is just insane. But, we've got disease, we've got epic rains. I'm not a biblical person, but these are some biblical events going on. Let's just put it that way.
Yeah, we got the plagues, we got the deluge. All we're missing is the locusts, and that's pretty much caps off the trifecta of doom on the biblical front. Yeah, somewhat historic flooding here in Chicago. If you know Chicago, you know Lower Wacker, and that just all flooded out last night. They had sirens and everything shut down, and you couldn't even go down. They had to rescue people from down there, so somewhat historic. They were showing shots along near Michigan Avenue where things that were on down by the river, tables, things were just floating away into the river because it's so high down there. Luckily, the studio, a good 13 stories in the air, listeners. So we're safe here. We can keep broadcast, as long as the power's on. Now I say that, watch, everything will die off. But so far, at least, so good. Let's head on out to another place that is river adjacent. That is, of course, St. Charles. Uncle Mike, sir, have you survived the flooding in your region?
We have. Thankfully, on our side of the river, our house is built on a hill. But I'll be honest with you, looking across the river, the people on the other side of the river whose houses are not built on hills, there's a lot of sandbagging going on, and I feel for them. And we've called and offered help, but looks like they have it under control, but they got a lot of sandbagging going on over there. And,
my keen-eared producer pointing out to me here, we may not have locusts, but we have murder hornets. So 2020 is off to a rockin' start here. Plague, deluge, and murder hornets as we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the portion of the show we break down what the heck is trading out there. And you know what, listeners? It seems like the plague and the deluge and the murder hornets cannot derail the freaking bull. It is off to the races yet again. The big concern out there, obviously, is all things coronavirus related, and it seems like there may be some room for optimism on that front, on the vaccine side, which, again, is the thing everyone's really been holding out hope for. If we can develop some sort of vaccine against this could maybe mitigate and begin to bring to an end all this madness we're seeing out there right now. So the markets are certainly pricing that in. Everything up. Well, not everything. Almost everything up nearly 3%, if not more, today. Dow leading the charge. Old world economy surging north yet again, up 3.6%. The S&P right in the middle yet again, up about 3.15%. And the NASDAQ, ever the laggard, up a paltry, a meager 2.5%. How dare they underperform the Dow by over a percentage point? Gold taking a bit of a break, as you might expect. Crude, WTI back up over the 30 handle. So yeah, negatives 40 last month, 30. You're talking a 70 handle swing, listeners. So that's the kind of world we're living in. Apparently, market's already pricing in like we've cured this thing. And as a result, we're seeing VIX cash taking a nice exhale, down almost 7.5 handles from where it was last show, right around 29.25 coming into showtime here. And we're seeing an old friend VVIX at about 125.5. That's down over 20 handles as well, just from our last show. We were just talking on Option Block end of last week and Vol Views, how that front portion of that curve was getting firm. Looks like they were pricing in a little bit of the old spookage in there, and apparently now over the weekend, we're seeing reversing of that script. Usually over the weekend, things get scary again. This time, not so much. Optimism running rampant out there. Our old friend VXX down 6 handles from our last show, right around 34.75 or so. Yes, 6 handles. That's a lot of erosion to kick out in the span of just not even a week. It's just a few sessions. So all the folks who've been loading up on the downside, including someone out there who's been loving that 35 strike on the puts in July for a while, over 100,000, I believe, open out there. They probably got a bit of a smile on their face out there today. And coming into showtime, we'll get to the numbers in a minute of what's lighting it up. Before we do that, let's go around the horn. Let's go opposite of the way we came. Let's start in the land of St. Charles. Mr. Uncle Mike, sir, it's definitely an Uncle Mike type of day. What the heck is lighting up your tape out there today, sir?
Well, I'm just watching this and looking to see if do we have a cure for the coronavirus and this Sorrento Therapeutics or whatever. And in looking at this, what is this? Is this real? Is this the real deal? Is this something that are we going to have a breakthrough, or is this just some crazy weird thing that's going to go away in another day or so and then send the market down another 20%? The market's mad at the Sorrento for telling us something that's not true, and it gets mad at Sorrento for playing an April Fool's gag on us in May, and then it goes down more than what it went up in the first place. So waiting to see. So that's probably the main thing that's lighting up my tape right now. I guess President Trump is meeting with big chain restaurants and talks about opening things up nationally, and just continuing to watch all the news drama on this. It feels to me like The Republicans want to open things up. The Democrats want to keep things shut down. And that seems to be the case all around in terms of what the truth is. As I always say, when it comes to Democrats and Republicans, who knows? But that's probably the main thing that's lighting up my tape would be the news in general as to what's driving the market up. A couple just names of note, so to speak. Apple is up over 2% on the day. Disney up almost 7% on the day, just under that. And then the other name that continues to just run, it's off its highs of the day as of now, but Hi-Ho Silver, we're around the 16 mark for SLV. So we have that combined with the financials up over 4% and XLE up over 7% on the day with going up along with crude. So still not able to trade this market because I got to be ahead on the market has to be strong enough to at least be ahead on the year for me to do my aggressive trading. But for my buy and hold clients and for my hedged clients, there's a whole lot of grinning going on, mostly by me.
There you go. We like to see a grinning Uncle Mike out there. You're right. Disney feeling the rampage to the upside there. Trading right now at about, I just had it up here on my screen. There we go. About 115, almost 116. Up nearly 7 handles out there. So I guess feeling the love, Disney Plus, I guess looking pretty good for them. I guess there's some insight into the parks, but they haven't really announced anything on that front. That segment obviously been decimated of late. Not sure how well ESPN really doing right now either with no live sports. The Last Dance maybe kicking in to help save that. Maybe if we have time, we can chat about that. It's obviously a big focus of conversation in and around the Chicagoland area out there as well. Mr. Meatball, what is lighting up your tape, sir, in this, at least for right now, Vol-mageddon, Vol-apocalypse out there, sir?
Well, you're actually not seeing well, let's start with the S&P 500. Super range-bound, believe it or not. We were right at this level, last week or a week and a half ago, and we've been at this level a couple times. And I would point out that the last time we were at this level, VIX was actually lower. We're seeing a noticeable uptick in realized volatility in the S&P 500 over the last week. That's one of the things that has me raising an eyebrow on some stuff. The news from this morning on the vaccine was good. I'm a little wary that it was 45 people that were in the test, which always makes me a little nervous. But in general, I think that you're seeing a lot of, the economy could open up type of trading. And we've seen the NASDAQ outpace the Dow and the S&P at such a clip that, I'm not surprised to see some of the price action today. Frankly, I think some of that's going to continue. I like long Dow as a way to be long the market over long Qs or long SPY, because really underneath this market, we've got our big 5 stocks that are up, but a lot of the rest of the market really isn't up and isn't back down. Berkshire Hathaway has done nothing for several weeks. That's if you are looking at kind of a broad market gauge, and that's more where I think the market actually is than what you're seeing on the headline indexes out of the S&P and the Triple Q. So, I'd like to see us break out from here before in the S&P before I'm really willing to buy it. And I'd like to see it led by stocks that aren't the big 5, or as I would say, the F-MAGAs.
Yeah, and that's been a refrain of yours for some time now, just how much correlation we're seeing out there with these indices, because how much of them are being led by the same handful of stocks, your F-MAGAs, your Facebook, your Microsoft, your Amazons, et cetera, and so on and so forth out there. But there is something to that when those handful of names make up the lion's share of multiple indices out there. It does kind of lead to a little bit of groupthink, if not group movement out there. Let's see what the markets are thinking in terms of numbers, because the markets, at the end of the day, it all breaks down to numbers out there, listeners. Right now, VIX looking pretty active, closing in on 250,000 contracts as of a few minutes ago. That's not that far from the ADV, which is a pretty anemic 330,000 right now. That number of 330,000 is kind of about what you might expect on a mid-May heading into a typical normal summer season. If you just looked at that outside of context, you looked at it, it's May 18th, and the ADV and VIX right now is 330, you might think, okay, yeah, the old, I won't say the adage, the cliche out there, but that's getting into that time of year where folks don't do a lot. So it makes sense. You would never know on the backs of just those numbers alone all the things I alluded to at the top of the show about the plagues, the deluge, the murder hornets. I just like saying that out loud. And all the other things that have afflicted us of late here in 2020. So that number by itself makes it seem like maybe all is right with the world again, or at least more on a more even keel than you might expect, given everything else going on out there. SPY lighting it up today as well, a little over 3 million, about 3.2 million contracts. The ADV, 4.75 million. The ongoing debate has been whether or not SPY is going to siphon off a lot of that SPX options business. The 60-40 treatment does like to keep some folks in the S, but right now at least, the S ADV has fallen off a cliff. It's down to about 1.1 million. That's off over 50% from where it was not too long ago. Right now, though, today, closing in on that, about 750,000 contracts on the tape as of a few minutes ago. So the S putting up some paper today. The Qs, 550,000. ADV, a pretty rocking 802. So the NASDAQ looking pretty good out there. And the IWM, a.k.a. the Russell, as we said before many times, I got a feeling we'll be saying it again this week on TWIFO, listeners. Small caps are where the vol action is these days. It's been leading the dance. If you're going upside, small caps leading the dance. Going downside, small caps leading the dance. And none of the F MAGAs in that index as well. So if you want to get a little away from the MAGAs and the F MAGAs, maybe small caps, interesting place to look. Either way, 534,000 contracts on the tape as of right now. The ADV, just a tick north of 700K out there. Let's go out to the individual names, see what's lighting it up. This is always a good barometer of how active the day actually is how many contracts it costs you to break into the top 10 listeners. And today is 160,000. That's pretty strong. There's been some days out here where that isn't that far from number one. So 160,000, that gets you all the way to BABA, number 10. Number 9, good old Microsoft. Been a perennial top 10er, people using Teams and Skype and everything else out there, as well as doing some gaming on the old Xbox. So Microsoft, a lot of irons in the proverbial pandemic fire out there at 183,000 contracts. Number 7, AMD, even, clear, crisp, 200K on the tape. Number 6, Bank of America, a space distant from Boeing this time. Who knew it? Bank of America, 207,000. In between those two like symbols comes Tesla at 221,000 for the number 5 spot. Number 4, our friends across the street there, Boeing. Wonder how they fared in all this massive flooding. They are right on the river there as well. 257,000 contracts on the tape. Number 3, Disney, the aforementioned Disney. Rollicking up north. I'm still looking to see what it is that's driving this upside in all things Disney, but 290,000 contracts on the tape right now. Apple, Uncle Mike mentioned them earlier, 396,000 contracts on the tape. That means number 1, good old-fashioned GE. I think I know why that might be. We're going to get to that in a little bit. If you're wondering, you're saying out there, it looks like all is right with the world again. We got a vaccine and everything else. The murder hornets not murdering many people right now, at least. But not all rosy out there. Facebook, of all people. Facebook doing a study of small businesses out there, and they determined that fully 1/3 of the small businesses that have shut down in this pandemic, they expect to never reopen, and 55% of them are never going to rehire the same number of employees. Maybe not never, but it won't, in the initial blush at least, rehire the same number of employees. So that's not exactly a rosy outlook for the economy going forward. Yet the market's shrugging that off in light of all the fun you have going on out there on the vaccine front. Let's go on out to see what's lighting it up in earnings season, because it is still that season. Listeners, before the bell today, we had Nordic American Tankers. That's a sector a lot of people have been watching of late. Nordic American Tankers before the bell. We also had Trivago. Tomorrow, after the bell, got some big names on the retail front. Got Walmart, got Home Depot, Kohl's. Wednesday, we've got Target and Lowe's. Thursday, it's retail week here. Macy's, Best Buy, TJX. We got NVIDIA. They formerly of the crypto canary in the coal mine. These days, not so much. Intuit and HP as well. And then Friday, you got Foot Locker, John Deere, and the aforementioned Alibaba. If you're wondering, do we have earnings move reports for these names? Yes, we do. Just hitting the site as we speak. Hot off the presses there, listeners. Let's look at a couple of them right now. Home Depot. Coming into this report, they were trading $2.39 and a third. They were pricing in $8.86. In the past, they've moved, get this, $3.86. So a whopping $5 more getting priced in right now. That's more along the lines of what I expected to see. Maybe not to that extent, but overpricing rather than underpricing. Yet we've seen a lot of the latter out here of late this season, which a little bit surprising given just how little we know about the future right now. Walmart, let's see if they're doing something similar. No, they're not actually. They're almost 126 at the time of this report, at about 125.94. They were pricing in $5.12. In the past, they've moved $5.31. So yet again, light on the vol front. Let's see, Urban Outfitters, they were at $16.65. They were pricing in about $2. In the past, they've moved $1. So they're looking to double their previous moves. Lowe's, they're popping off after the bell on the 20th. They were at $113.78. They were pricing in $6.76. In the past, they've delivered $6.55. Let's do a couple more here. Target, also on the 20th after the bell. They were closing in on $121. At the time of this report, they were pricing in $6.49. In the past, they've delivered, get this, $8.88. So more light volatility on the earnings front. That's a surprise. Let's go out to NVIDIA. It's always been a pretty active and very volatile name. At the time of this report, they were trading $339.63. They were pricing in $24.81. In the past, they've moved $23.20. So a little bit of extra juice out there, but not quite a ton. That's kind of been the moral of the story out here, even though, and actually, I guess early weeks of this season have actually kind of merited that. Week 1 so far, the names have under-delivered by about 88%. 100% obviously would be 1-to-1 what the straddle was pricing, and they delivered about 88%. 60%. Remember, week 2 was the weakest of them all. 60% for underperformance out there. Week 3, 88%. It wasn't until you got to week 4 you actually outperformed slightly by about 102%. And then last week was a pretty active week, 122% outperformance. So a pretty active week last week. We'll see if this week what it has in store for us as we keep on rolling. It's time to get weird. It is time to get wild. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block. It's time to get weird. Time to get wild. Remember I said earlier, listeners, that I thought I had a reason, perhaps some insight into why GE was dominating the tape on the most active fronts at 652,000 contracts as of a few minutes ago. Not quite 2x Apple, but about 1.5x what Apple's got going on, which how often can you say that? Any name is any multiple of Apple out there, let alone about almost 3x, actually about almost exactly 3x Tesla. How often can you say that out there? So GE lighting it up. A stock looking pretty good today as well, up 79 cents to about 6.29. That puts it up about 14.33%. You guys know the travails of GE over the course of the past year. I'll give you a brief overview in case you missed it. A year ago, listeners, they were trading almost $10, $9.88. They kind of hovered at that level for a while, got up to about 10.5 in July. Then they started selling off. We got down to about 7 and change in August of last year. And they kind of rebounded again up to 9, back down to 7 or so. It wasn't until November they started rallying again, got back up to about 11 1/3, hovered there for a while, and then they peaked. They topped out, guess when, listeners? February 13th. Yeah, an inauspicious day to reach your high there of about 13.25. Looks like that was the high out there, because we all know what happened after mid-February. Fell off a cliff, got down to $6.11 out there in GE land, and they kind of rebounded pretty quickly again, got up to $8.12, so rebounded about $2. By late March, they were trading $8 again, and then it kind of sold off again down to about $5.48 as of just a few sessions ago. So GE is on their low, now rebounding again up to $6.28 as of this time in the show. And yet something's lighting up the tape out there from an options perspective. Let's go find what it is. We unleashed our Eye of Sauron here before the show, listeners. It looks like someone, Mr. Meatball, is having some fun in GE calls, and perhaps doing a little bit of the old roll out there. Interesting timing if that is indeed the case. We've got, first off, a bunch of 50,000 lots going up out there. We first noticed a 50,000 lot of the D7 calls going up for 81 cents. Someone lifting the offer. They were 80 at 81 out there. And then I saw another 50,000 lot going up for 80 cents right about exactly the same time. So clearly there was a spread going up. So he dug a little further and noticed that the OG 12 calls are also going up around the same time, also in 50,000 lot blocks. One 50,000 lot block for 2 cents. So interesting stuff there on the bid. Interestingly enough, there was another about 50,000 lot block, or at least 49,859, but it went up about an hour and change later, which is kind of weird. That one's marked late. So I'm going to go out on a limb and say that's probably tied to that first spread, and the guy never got around to ticketing the last 50,000 lot leg of this 200,000 contract trade until an hour and change later. But there's no way that's not tied in. That was also the OG 12s, another 50,000 lot roughly, going up for 2 cents on the bid there. So it seems like, Mr. Meatball, someone's doing the old upside, not that much upside anymore, but they still are upside call rolls and taking off the OG 12s. They decided, you know what, 12 by August, probably a bit of a bridge too far. I'm willing to spend about 80 cents close to it because these OG calls are effectively worthless. I'm surprised they got anything on the bid for those. These OG calls going out for 2 cents. They decided to spend about 80 cents, Mr. Meatball, to keep the party alive in GE all the way out to December, but this time getting a much more relevant strike, getting the 7 handle as opposed to the 12 handle. So what do you think about our friend here paying a little bit, but keeping the party alive and making that party a little bit more intense out to December on the 7 strike, Mr. Meatball, in GE?
Makes a lot of sense to me. They had lost basically all of their delta, except, with where GE vol is, you're still getting, 11 cents for the 12 calls. If we rally for $2, those calls may still be worth 12 cents. They might be worth less. This was their opportunity to take advantage of high upside implied volatility across the board in General Electric, especially with it having the big update today. So I applaud the move as a smart way of selling a bunch of upside and capturing some and readjusting the delta. So I think it was a good move.
You are usually a fan of readjusting the old deltas. So, yeah, you know what? We'll keep an eye on this guy. We'll come back to GE perhaps sometime later in the year to see how these calls are faring. But meanwhile, we have to keep rolling, listeners. Pun intended. As we head on out to next up, Capital One Financial. Not a name that comes across our radar here in the odd block very often. Ticker symbol COF. C-O-F. A year ago, let's see, they were trading 91.38. So a wee bit north of where they're trading right now, listeners. Today, as of a few minutes ago, trading 62.85, but a good day for them nonetheless, up about 484, or up over 8, about 8.33% out there. So the name, let's look back really quickly. A year ago, trading 91.38, and they kind of hovered at that level around there, give or take a few points to the upside and to the downside, for the better part of the year until they got to mid-February, where they were trading a little bit north of that, actually. They're trading 103 and change on February 18th. And then yet again, we all know what happened in February. This great sell-off happened. These guys got hit pretty hard. By February 13th, they were trading, February 20th, actually, they were trading 103.5. And then by, let's see here, by March 18th, they were trading 44.30. So off nearly 60 handles in the span of just a few weeks out there. So bit of a shellacking out there in Capital One Financial. Then they kind of rebounded really quickly up to 57.87. Then they sold off again. Looks like they have had 3 or so V-shaped recoveries, all of which have faltered in the past month or so. Recently, they got as high as, let's see, about almost 70, 69.75, and then they sold off again down to about 53 and change. So the market keeps lifting them up and then fading that rally. It's happened 3 times so far. Maybe we're poised for yet another. Maybe the 4th leg of this V-shaped recovery here in Capital One, because right now it's up about 5 handles. So whatever is driving this out there, they like it and then they hate it, and then they like it again and then they hate it again. Seems like perhaps we're on the like it tip again. Let's see what our Eye of Sauron found out here today. Maybe that'll provide a little bit more insight out here. And looks like it's on the put side of the fence. We saw 25,000 pretty decent-sized prints going up today. Another sign that things are robust out there today. 25,817 of the June 45 puts going up for 56 cents. That was the bid. They were 56 cents at 63. So seems like someone liking themselves a little bit of the old line in the sand out here. And if they've got to buy it, they're going to buy it. Not quite 20 handles. We're pretty darn close below where it is right now. Let's see. The low of the year was 38. So 45 still has some downside to it. Because obviously 7 handles, and obviously it can go much lower. But in terms of recent history, And we hit that level pretty recently. Back on March 23rd, it hit 42.87. Then it bottomed out again at 42.27 on April 3rd. So it has broken that strike a few times in the last month and change. So even though it is looking pretty far in the rearview mirror right now. Mr. Meatball, same question for you. What do you think about these? Looks like line in the sand puts here, pretty far out of the money in Capital One Financial, sir.
I like it a lot. With financial vol as high as it is and all these stocks in the toilet, it's hard not to like put selling. It's something I've been in favor of really since, right around March 23rd. I've been a big proponent of put sales as a way of trying to get into names and or produce income.
Yeah, it seems like someone doesn't mind buying himself some Capital One. In the meantime, he'll pick up 56 cents, 25,817 times in the meantime. If he doesn't pick that one. So you know what? We're going to keep an eye on that one. Perhaps come back to that. See if that line is crossed or see if our friend is pocketing that 56 cents, 25,000 times and change. Last up here on the old odd block. We've got, looks like Medallia Inc., ticker symbol MDLA. There we go. That's better. Got, let's see, the 25.74 right now, up about $1 and change. Buck and weights up about 4.33%. Good little lift for these ones. If you're wondering, these are a customer experience management firm based out of San Fran with offices in Buenos Aires, in case you're wondering. A year ago, they were trading about $37, so a wee bit north of where they are right now. And then they spiked up to 43 even, July of last year. And then they kind of sold off again in the subsequent months, and 26 again down in September. And they kind of hovered around that mid-20s to low 30s range for a while until February came along. They were right at the low 30s edge. They were looking pretty good, 30.5. And then they got clipped a bit. Not quite as bad as many others have out there. They sold off an initial blush down to about 18.25, so that wasn't looking too good. But then they rallied back up to about 22, almost 23. And then, of course, that was in late March. And then they sold off again, second sell-off for them, down to 16.83 in April 3rd. They got down to as low as about 16.04. And then that was the bottom for them in early April. And they kind of have slowly been rebounding ever since. Like I said, right now at about 25.69, so up nearly 10 handles from that second V-leg, or the bottom of that second V-leg, I should say, out there in Medallia. Let's see what our Eye of Sauron found for us today. And looks like more puts. This time, probably line in the sand. I'm going to go out on a limb and say probably. We saw 12,256 of the June 17 half puts going up for 15 cents. What makes it probably is that, as you might expect in a less liquid name like Medallia, these puts weren't exactly super tight. We're not talking front month at the money SPY or Apple. These are out of the money puts in Medallia Inc. So they were a nickel at 40 cents, listeners. Paper coming up for 15 cents, 12,256 times. If you bought them 15 cents, he's got a hell of a broker. So I'm going to go out on a limb and say he probably sold these. These are obviously opening. They do have earnings on the 2nd after the bell. So there are earnings baked into. That's why he's getting that 15 cents worth of juice out here. Mr. Meatball, seems like our second in a row of a little bit of line in the sand puts this time. Also June and also out of the money, but this time in Medallia Inc., sir. What's your Eye of Option Pit telling you about these?
I think, again, it makes a lot of sense. That with vol high, it's the time to sell puts if you want to own stock. I've said that to several people repeatedly. Now is the time to be selling puts to get into stock because it is. The snozberries taste like schnozberries. And then now's the time to start selling puts to get into stocks because now's the time to start selling puts to get into stocks.
I like that. I like that rationale. Now is the time to start selling puts to get into stocks because it is. You heard it here first, or maybe 57th here. But you know what else it's time for, listeners? It's time for Uncle Mike to be unleashed. It is time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, listeners, you know the dance. Perhaps not the last dance, but a dance nonetheless. It is Monday. It is time for the Strategy Block. I almost said the mail block. That's later. It's time for the Strategy Block, where Uncle Mike comes on down, stone tablets and options wisdom in hand, ready to dispense it to you, the eager masses. Uncle Mike, sir, what do you have in store for us on this very festive, very Uncle Mike style Monday, sir?
The very festive Uncle Mike style Monday. Well, I'm going to talk about trading options within a 401k. Not a lot of people are aware that this is something that actually exists and can be done. So what I want to go through on this is, let's say today is partially for the employee, but mainly for the small business. If you are an employee for a larger company and you have a 401k at your larger company and you look and you're frustrated because I can only be in the growth fund, the value fund, the this fund, the that fund, the international fund, the fund, and you can only be in these funds, and you want to do something along the lines of options, whether it's sell some covered calls, whether it's do the Uncle Mike simulated index concept, whether it's doing some collars or some spreads, whatever the case may be, and you have a plan and you have your risk managed in the right way. One thing that you can do is you have the ability to talk to your HR person, whoever's in charge of this, and you want to ask for something called the Summary Plan Description, or the SPD. And what that is that's a document likely 6,000 pages long that you may or may not understand because it has a lot of legalities to it. But in there, you may or may not have something called a brokerage account choice, meaning that you may have the ability to have your account, your 401k, go into a brokerage account option. Now, there will be some type of fees for this typically, but a lot of plans do offer that, and not a lot of people are actually aware of it. What you can do then is you can look to see if it has that ability. And depending on who your broker is, you may be able to have the same option trading privileges within your within your 401k that you would within your IRA. So that's something with which to consider when looking to do some type of trading within a 401k if you do have it. Now, let's say that turns out that you don't have it, then there's some things you can still do. Perhaps maybe you have a smaller IRA. You can buy a bunch of calls in the smaller IRA and then use the 401k for more conservative things. There's a lot of ideas for that. But that's something with which to consider if you are looking to do some type of option trading within a retirement plan. Now, let's say you're a small business. Let's say that you own your own business. Maybe you have between 5 and 50 employees. And you're looking to set up some type of a retirement plan, whether it's for the purpose of your business, whether it's for the purpose of sheltering money or helping your employees retire, whatever the case may be. Well, that is something that we do at St. Charles Wealth Management, or as well as RCM Wealth Advisors, the company with which I have the registered investment advisory through. We work in teams quite a bit, actually. But with that, the way with which you can look into retirement planning, there's three choices for a small business if you are looking for a defined contribution plan. Defined contribution meaning that the amount of money you're putting into it or that you contribute to it is defined. Defined benefit plan is for a pension plan, meaning that you're going to have a certain amount when you're done, and it's mapped out and set out to do that. That's a different story. What I'm speaking of are for just defined contribution plans. You have a SEP IRA, a simple IRA, as well as a 401k as your choices. Now, a SEP IRA, those are great. I like them. If you're if you're a one-man show, I think they're wonderful. You can contribute up to 25% of your income into a SEP IRA every year, and you can trade options on it. But if you have employees, the same percentage of your income, your reported income that you contribute for you have to contribute for them. Now, if you want to do that for your employees, great. But if not, a SEP might not be the right thing for you. The next type of plan would be a simple IRA. Now, a simple IRA, and there's limits to the SEP for the SEP as well as the simple. The SEP, your limits are going to be roughly around the $50,000 mark. If that's 25% of your annual income. Plus, that's the amount of actual W-2 income that you're claiming. But you would have full option trading privileges when doing that, or but the same as what you would have for a normal IRA. Now, the next one would be a simple IRA. Now, that one you can't quite contribute as much to, but it works a little bit different in that your employees, you either have to match what they put in up to 3%, or you can just give them a 2% contribution, whether they match or not. You get your choice in terms of what you would need to do with that. The limits of the simple IRA are much more in that you're probably only going to be able to put in around $12,000 to $13,000 per year within that, just depending on how you're set up. Now, the final way is a 401k. 401k has, without a doubt, the most paperwork involved with it. It's the most complex, and it often scares most business people away. But within a 401k, you can have it set up to where you can put in nothing for your employees, but you can put in I believe it's $19,000 for 2020 for yourself, but you can also put in additional contributions, which kind of go beyond the scope of the strategy block for right now, but is a way with which to shelter money. Now, within the 401k, you can have it set up to where if you have someone that is a fiduciary or have someone that will walk hand in hand with you from fiduciary obligations, it's very important that you choose someone that has an understanding of how that type of thing works. But when doing so, you also need to have an understanding of what are competitive fees, what are competitive ways with which to help your employees if that's what you're looking to do. If you want to provide a match, you do not have to within a 401k, but you can if you would like to. So if ultimately you don't want to provide a match for your employees, 401k might be the way to go. However, sometimes the fees aren't always the most friendly. That's why it's important to work with someone who does that very frequently. And that's not something that I talk about typically on the option block, but I felt I felt like I should today, just because I know in the coronavirus, everyone is looking to save every penny with which they can for everything with which they do. And one thing that RCM does, the parent company who I'm still with, have been with for over 10 years, is a lot with 401ks. We do a lot of things to where the guys at RCM or the other people there will look at a plan and say, okay, this is ERISA compliant, this has this, and this. And then I do the nice simple things like discuss option trading strategies within it if need be. So that's kind of how we work as a team along those lines. There's a lot of hidden fees that exist within 401ks. So if you are looking for another way to save money during the coronavirus that not a lot of people are thinking of, the fees within your 401k, if you are a small business owner, are something with which to take a look at. And we're happy to look at that at RCM/St. Charles Wealth Management as well. Now, within the 401k itself, how the heck do I trade during this? Well, I've talked about this a little bit before on the show. If you're concerned, let's say that you're thinking that, I'm just going to wait for a pullback, and then every day the pullback doesn't come, and you're concerned that the market's going to go higher and you're going to miss it, but you don't want to take that downside risk, and you keep wrestling with that every day, you can put a majority of your money into something that you deem as safe, whether it's a bond, whether it's just cash, and then maybe just buy a few call options. Buy calls as a way of hedging against a comeback if you're that scared to get in the first place. Also, if you want to get in at a lower level, perhaps sell some puts at a lower level. Every concern for every bad emotion that you have in getting involved with this market, whether it be good or bad, there's an option trade that's available to help you with that emotion that a lot of people feel with that, especially within retirement accounts. I would say that probably 90% of what I personally do is involved with a retirement account in one way, shape, or form. I do a lot of IRA trading for clients. And so if you're at a stage to where like, oh, the market's come back, but I'm only like maybe 4% off of where I was at the beginning of this coronavirus or at the beginning of the year, I just need another 4%, but oh man, should I get out now? Because it might pull back. Or if you have any of those feelings, there's an option trade out there that can help you with anything. So what I would encourage you to do is really take a look with an open mind on, number one, trading within the IRA and seeing what makes the most sense for you. Because let's say that all these drug companies come out and say, April Fools, we really don't have a vaccine. And then, by the way, we're at war with China and all these things about us having a cure for coronavirus. No, we really don't have anything along those lines. And then the S&P goes down another 1,000 points, which could happen, and you're concerned with that. make sure that you look at it with an open mind, because options give you options. And that is the strategy block for today.
Options do give you options. Let's do that in a second as we keep on rolling right on into the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody. Welcome to the Mail Block, the portion of the show where we get into what you guys have on the brain. Sometimes I like to ask you guys questions. A lot of you guys chimed in on our poll last week about where you think the broad market is going. I like to flip the script a little bit there as well. Sometimes ask you from a broad volatility perspective. Let you play along the way we do every week on volatility views. This time a little bit longer term, going out a month or so. As we were coming into the show earlier today, we saw VIX cash just breaking through 30 to the downside there on 29 and a quarter or so, which raises the question, VIX hovering around 30, what do you think? Is this the beginning of the end? Really, does it mark the end of this recent vol resurgence that we've seen, getting all the way up to 80 and beyond and then coming right back down again? Still obviously very high, so don't think vol is low, but still that recent resurgence, is that over? Or is this really just maybe a bit of a breather, setting the stage for the future of what vol has in store for us? We gave you 4 choices yet again. A month from now, we asked you, a month from now, where do you think VIX and spikes are going to be? And we gave you 4 choices. It's going to be higher, so north of 35, lower, south of 25, right around here, a nice 10-point range to right around 25 to 35. It's around those levels. Or are you saying, I don't care, I'm still in cash? Let's go around the horn again. Let's go back out to the greasiest of meatballs. Mr. Meatball, sir, if you have a thought, you want to share it, feel free. And then also, B, more importantly, what do you think our audience is up to?
Well, like I said, we've had a curious uptick in movement and realized volatility. We're at a new high, and the VIX is nowhere near its low from a week and a half ago. So, I think that I think we have a trip above 30 coming, and maybe a run at 40. So, but our viewers, they're pessimistic. So, but they're not crazy. So let's say what's kind of the second most pessimistic one?
Well, they can choose above 35, below 25, or around here, 25 to 35.
I'm going to say above 35 is winning.
Okay, 1 vote for above 35. Mr. Uncle Mike, sir, while you're busy slinging away in 401ks and IRAs, if you have a vote, sir, have at it. And also, more importantly, what do you think our audience is voting for?
I am going to agree with what I think our audience is. I think our audience thinks that we're at pretty good levels right now. And I'll say 25 to 35, and that's what I'm going to say as well.
Interesting. Uncle Mike saying hovering around here. Our audience has been fading of late. They faded the first run up over 2,600 very firmly. There were 2/3 in the camp that we would be below 2,600 in the S a month and change from then, which was pretty much now. Didn't really happen. We asked you again last week what you thought going forward another month. We were at around the 2,900 level at that point. And you guys are fading that again by a little bit smaller margin. There was about 2/3 last time. This time less than half, about 44%. But still a hefty margin saying going to be downside. So I had a feeling coming into this that our audience is going to say vol would be higher. And that's pretty much what we're seeing right now. This just went live before the show. So this is early going, listeners. There's still many, many more people to weigh in here. But in the early blush, we've got about 45% saying north of 35. And then we've got, let's see, number 2 is right around these levels where Uncle Mike is hanging out, 28.6%. And then lower, so below 25, 21, about 0.5%. And I'm still in cash, I don't care, at about right around 5% out there. And we got some comments here and stuff, but I know we got to keep on rolling. Uncle Mike's got a lot of stuff to squeeze in. So let's keep on rolling to our final segment. It is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block, the portion of the show. We tell you what we're keeping an eye on for the rest of this week into the weekend, because I'm such a nice guy. I'm such a charitable fellow. I'm going to say, Uncle Mike, sir, I will allow you the honor of not only going first, but you get to do a combo if you want. You can do a what are you watching for the rest of this week, as well as if folks are intrigued, they want to reach out to you. Obviously, there could be a lot of questions, but what you just talked about with the 401ks and the IRAs and all the nuances therein. If they have questions about that, or maybe they just want someone to help them roll some puts in these crazy markets, where should they go? What should they do, sir? So have at it on both those fronts.
Holy cow, I'm excited. Okay, so first thing in terms of what I'm watching, like Mark pointed out earlier, we have been here before or around these levels before. If you look at the end of April, we were at these levels on the S&P 500 approximately. We made another run at them roughly a week ago, and now we're back. And so one of the questions becomes, can the market sustain a triple top in the near term? And I'm going to look to see if we can go through this. So I think today was a very important day to see where we go. And I think the rest of this week's very important as well to see if we go straight right back down like we have the last couple times that we've been within this range. Also watching just the news to see if we really do have a cure, and pretty much what everyone else is watching. When will the U.S. open, and if will the U.S. open, or Illinois and local areas and things like that. In terms of, to answer your question, where you can go to learn a little bit more about what we do, go to stcharleswealth.com. If you do have questions, if you're a small business and you have questions on what you can do for option trading within a 401k or an IRA, or if you're just looking at this and saying, I don't know what the heck this ERISA guy is talking about, give me a call or shoot me an email. More than happy to discuss such things with you. stcharleswealth.com, or give me a call directly, 630-885-0017. Myself and my team are happy to help.
There you go. The man's happy to help. If you don't call him up, he won't be happy. Keep him happy. stcharleswealth.com is the place to go to begin your journey. Not so much to the dark side, Uncle Mike. It's really more of a light side journey. Call him up, get that journey going. Head on over, stcharleswealth.com. Since we're talking around the block here, I'll do a quick revisit of the big names popping off this week. If you like to focus, and I like to focus on the micro side, the individual names. We got that for you again. Nordic Tankers, well, that was this morning. Walmart, Home Depot, and Kohl's on Tuesday. Target and Lowe's on Wednesday. Macy's, Best Buy, TJX, NVIDIA, Intuit, and HP on Thursday. And the good old Foot Locker, if you're into shoe retail. Foot Locker and John Deere and Alibaba on Friday. So a lot of names popping off. Where can you find all that good stuff? Of course, the optionsinsider.com. You got the earnings move results, and the earnings season reports, a trifecta of reports for you guys to check out. And the best part, it's freaking free. You can't beat the price. Click on the options, news, and articles tabs. You can dive deep into these names and a whole bunch more that I didn't have time to get to. And Mr. Meatball, sir, since we gave Uncle Mike the opportunity to do a twofer, we shall do the same for you, sir. First off, regale us. What are you keeping an eye on for the rest of this week until we can gather here together on Thursday? And secondly, if folks are intrigued, they want a little bit more option pit in their lives, maybe they want to reach out with a webinar, get a sweet FMAGA hat, where should they go? What should they do?
Yeah, so I'm really watching this level in the S&P. I think it's really key. I'm watching the Dow Jones. You know, the S&P is at, 2950. So it still has about 500 points, 400 points to make up. The Dow Jones still has almost 5,000, 6,000 points to make up. So I'm really watching those two indexes to kind of see where they go. I'm watching XLI. I want to see energy continue to move, financials, industrials. And I'm watching this VIX level. I'm really raising an eyebrow that we're starting to move so much again. That's not necessarily getting 85-point moves, regardless of direction, tend not to be bullish. So I'm watching this very closely. Yeah, in terms of me, go to option.com, sign up for our newsletter, and you get some awesome content from me every day. So go to option.com and just sign up for our newsletter. You can put in your Herbie Hancock and your Herbie email.
Herbie email. 85-point moves tend not to be bullish. I tend to usually I concur with that, and that seems like that's pretty much been the case so far. Today, notwithstanding, you know where to go, listeners. You want your sweet FMAGA hat, or perhaps your MAGA hat, or you want to join a vol trading club. Luckily for you, it's a virtual club, so you don't have to get the key to the club washroom right now. You don't like. And all the other good stuff, the Nuggets, the Legion, all the other good stuff, optionpit.com. Sign up for the list over there to begin your journey to the dark side. So you go light side with Uncle Mike, stcharleswealth.com. You go dark side with Option Pit and the Rock Lobster and all that good stuff over there. And on behalf of the Greasiest of Meatballs and Uncle Mike and myself, I thank all of you out there downloading, streaming, subscribing, for sending in all your questions and your comments and all your love. Got some historic anniversaries on the way this week. We got TWIFO 200 coming up. Got VolViews 400 coming up. It's a double week. We just had Option Block 900 a couple weeks ago. It's crazy town how many historic anniversaries we have coming up. So stay tuned for that later this week. And if you're saying to yourself, this is just one show, I need more in my ear holes, don't worry. If you're listening live, we're going to pump a lot of good stuff in between. We'll be back in about exactly an hour to talk all things crypto. We're in the wake of the great halving. How is vol holding up? What's going on with the SKU? What's going on with the options activity? And a whole bunch more. Going to break it all down in a little bit on the Crypto Rundown. Then we'll be back again later this week. Great interviews coming to you on the network this week. Of course, OPR, all the other good stuff scheduled this week. OBC, Bootcamp, back in the rotation. You'll be getting that again this week as well. And we'll be back again on Thursday for more of the Option Block.
The Option Block is brought to you by TradeStation. TradeStation has been giving options traders an edge for over 20 years. Their suite of simple yet powerful analysis tools and lightning-fast order execution can be accessed as an app on your phone, web browser, or computer. Education is in TradeStation's DNA, offering help for traders of all levels. And now, TradeStation is commission-free for equities and options trades. For more information, visit tradestation.com/optionsinsider. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.